All right, so today we're diving deep into PepsiCo
PepsiCo.
to see if it's a stock worth adding to your portfolio.
Worth considering.
We'll be looking at their stock ticker symbol PEP.
Rice.
And to guide us on this deep dive,
Roadmap.
we've got analyst ratings and forecasts from Tip Ranks,
Excellent source.
along with financial data and comparisons from Zacks.
Always good for context.
So the real question here is, should you buy,
The big decision.
hold, or sell PEP?
That's what we're here to explore.
Now, PepsiCo, they're obviously a massive company.
A global giant.
Beverages and snack foods, everyone knows them.
Household name.
But we need to look beyond the brand recognition
Absolutely. Gotta dig deeper.
and really analyze their financials and prospects.
That's how we make informed choices.
So let's start with this interesting fact from Zacks.
Lay it on me.
They give PepsiCo an A for growth,
Strong potential there.
but a C for value.
Now that's a head scratcher.
What's that tell us, that combination?
Well, an A for growth suggests, they've got strong potential,
Makes sense.
likely driven by their expansion into, like healthier snack and beverage options, lining with current consumer trends, right?
Definitely.
But then that C for value, it kind of hints that the current stock price might not be a screaming bargain.
So growth potential is there,
Definitely there.
but maybe not at a steal.
Exactly. Got to weigh those factors.
Okay, let's look at their financial performance then.
Numbers time.
Zacks highlights their earnings per share growth.
EPS, crucial metric.
It's been solid, around 9.35% over the past 3 to 5 years.
Historically pretty good.
But, and here's the thing,
Uh-oh, a but?
their projections for this fiscal year are a bit lower.
How much lower are we talking?
Zacks projects 6.97% growth for this fiscal year.
Still positive, but a noticeable dip.
So is that slowdown a reason to worry?
Well, it could be a natural part of their growth cycle. As companies mature, growth tends to moderate.
Makes sense.
Plus, got to consider market saturation. How much more can they really grow? In markets where they're already dominant,
Yeah, good
point
point.
international expansion, that could be their key.
To keep that growth going.
Exactly, finding new frontiers.
And then there's the projected sales growth,
Let's hear it.
only 0.74%.
Okay, that's pretty meager.
Should that be a red flag?
Not necessarily. To really understand that number, we have to look at PepsiCo's position in the market.
So compared to their competitors?
Exactly, especially their arch rival, Coca-Cola.
The Cola Wars?
Both giants constantly battling for market share.
So in that context, maybe 0.74% isn't so bad.
Could be holding their own in a tough fight.
So then innovation becomes crucial.
Absolutely. Gotta stand out somehow.
What's PepsiCo doing to capture more of that market?
Are they shaking things up?
Any new products or ventures that are really exciting?
Well, they are pushing into some interesting areas, like zero sugar beverages. That category is booming.
Healthier options.
Right, aligning with those changing consumer tastes.
And expanding beyond their core products, too.
Exactly, not just sticking to the old standbys.
Now let's talk valuation.
The bottom line.
The current price for PP is around $157.97.
As of today,
But Tip Ranks analysts,
the folks with the crystal balls,
they have an average 12-month price target of $184.80.
so an upside of
Over 16% potentially.
sounds promising on the surface.
But how do we square that with Zacks C for value?
Yeah, that's the million-dollar question.
Maybe hidden factors impacting that perceived value.
Just things we might not see right away.
So to understand that C rating,
We got to roll up our sleeves.
we need to look deeper into their financials, their jet levels.
And how their price-to-earnings ratio stacks up against their industry peers.
So those hidden factors, they could be influencing the valuation.
Definitely worth investigating.
Speaking of things that could impact value,
What you got?
have there been any recent acquisitions by PepsiCo?
Acquisitions that can shake things up,
Absolutely. They can enter new markets, gain a competitive edge.
but without specifics from our sources. It's tough to say how much they've actually impacted PepsiCo.
So acquisitions, something to keep in mind.
Definitely a factor to consider.
Now, here's something that might surprise some people.
Oh, I love surprises.
PepsiCo isn't just about products.
There's more.
They also have a services component.
Interesting, I hadn't thought about that.
We need more details to really gauge the size of it.
How big of a piece of the pie is it?
But it's another factor to consider when evaluating their value.
Makes sense, the more you know.
And of course, we can't forget the bigger economic picture.
The macro stuff.
How might things like inflation
Oof, that's a big one these days.
and consumer spending,
People tightening their belts.
how might those trends affect a company like PepsiCo?
Well, generally, companies like PepsiCo, established brands, diverse product portfolios, they're considered more resilient. During economic downturns,
So they weather the storm a bit better.
it's like this. Think about it.
Okay.
Even when budgets are tight, people still got to eat and drink.
The essentials.
Exactly. And PepsiCo covers those bases.
So potentially a safer bet in uncertain times.
It'll be a good hedge.
All right, let's break down what we've learned so far
Time for a recap.
into some clear pros and cons.
Help our listener weigh the options.
On the plus side,
The good stuff.
PepsiCo has a history of growth,
Solid track record.
strong brand recognition globally,
Everyone knows Pepsi.
and that A from Zach's for growth potential.
Can't ignore that.
Plus, they're actively innovating to stay competitive.
Always evolving.
And on the downside,
The not so good stuff.
well, those projected growth rates are lower
A bit of a slowdown.
than their historical performance.
Got to keep an eye on that.
And that C for value, it suggests the stock.
Might not be the bargain of the century.
And the competitive landscape is fierce.
The cola wars are real.
And they're operating in a market influenced by
All sorts of external factors.
economic conditions
Yeah,
and those evolving consumer preferences.
it's a complex equation.
So plenty to consider, for sure.
No easy answers.
Let's move on to another key aspect for investors,
What's next?
PepsiCo's dividend policy.
Ah, the sweet sound of dividends. So PepsiCo, they're known for being a pretty reliable dividend payer.
Yeah, that could be a big draw for investors.
Especially for those seeking that consistent income.
Right, those long-term investors.
Exactly. But we need to know how it compares.
To the competition.
Right. What's the yield?
And is it growing? That's what our listeners want to know.
Yeah, that's the key.
So unfortunately, our sources don't give us specifics on the yield right now.
That's a bit of a bummer.
But it's still super important to compare,
Absolutely.
compare PepsiCo's dividend yield to other companies.
In the same sector.
Right, especially to Coca-Cola, their main rival.
Always got to benchmark against the big players.
Exactly, and beyond just the yield.
There's more to consider.
Investors should also think about the consistency.
And the growth of those dividends.
Does PepsiCo have a track record of increasing its payouts?
That's a good sign, usually.
Right, it shows confidence in their future profitability.
Exactly. If they think they can keep making money, they're more likely to share it with investors.
Makes sense. All right, let's shift gears a bit.
New topic.
Let's talk about share buybacks.
Ah, another way to return value to shareholders.
As you explained earlier.
The company buys back its own shares,
Right, on the open market.
reducing the number of shares available.
And that can increase earnings per share, right?
Exactly. Same profit, fewer shares to divide it among.
Each share becomes more valuable.
In theory, at least.
So does PepsiCo have a history of using share buybacks?
That's a good question.
And what would that tell us about their financial strategy?
Well, if they're actively buying back shares consistently, it suggests they believe their stock is undervalued.
Interesting.
And they're committed to, boosting shareholder value.
Trying to drive that price up.
Exactly. Put their money where their mouth is.
Now, let's move on to a topic that's becoming increasingly important to investors. ESG factors, environmental, social, and governance.
Yes, ESG. It's not just a buzzword anymore.
It's going mainstream.
Investors are realizing how much it matters.
Right, a company's ESG performance, it can really impact their long-term value.
And their risk profile, too.
So we have to consider these factors with PepsiCo.
They're in a resource-intensive industry.
Global supply chains, lots of moving parts.
So their environmental impact, labor practices, ethical sourcing, it all comes into play.
So where does PepsiCo stand on all this?
The big question.
What are they doing to address things like climate change?
Water usage, packaging waste.
Their social impact, all of it.
Well, that's a complex question.
Lots to unpack.
It requires looking at their sustainability reports.
Policies, initiatives, all that good stuff.
Investors need to assess their track record.
And their current actions.
Are they walking the walk?
When it comes to their environmental footprint,
Labor practices, supply chain management.
community engagement, the whole 9 yards.
It's a lot to digest.
It really is. So how can investors even begin to make sense of all this?
It can be overwhelming.
Especially for a company as big and global as PepsiCo.
Thankfully, there are resources out there.
Like what?
ESG rating agencies, research firms.
They provide assessments of companies' ESG performance.
Can be a good starting point.
But investors should still do their own due diligence.
Don't just take their word for it.
Look at the specifics of PepsiCo's initiatives.
What are they actually doing?
And consider if those actions align with your values.
As an investor.
So should ESG performance be a deal breaker with PepsiCo?
or just one factor among many.
It depends, right?
It all comes down to individual investor priorities.
Some people prioritize financial returns above all else,
The bottom line is the bottom line.
but others might be willing to accept slightly lower returns
If the company's doing good in the world,
if they align with their values.
exactly. It's about more than just money for some folks.
All right, I think we've given our listener a lot to think about here.
Food for thought.
We've covered PepsiCo's financials,
Dividend policy, share buybacks,
even their approach to ESG.
all crucial factors to weigh.
But before our listener makes a decision,
There's one more piece of the puzzle.
all right, so we've really gone through it with PepsiCo.
Yeah, we've covered a lot of ground.
Their financials, their dividend approach.
Share buybacks, how they're tackling ESG,
Now it's time to answer that big question.
the one everyone's waiting for.
Is PP the right stock for your portfolio?
Well, as we've seen, it's not a simple yes or no.
There are so many factors.
It all boils down to your investment goals.
Risk tolerance, your time frame, all of that.
Exactly, got to personalize it.
Let's break it down for our listener.
Let's do it.
Say you're an investor focused on growth potential.
Looking for those high returns?
Where does PepsiCo fit in?
Well, that A rating for growth from Zacks, that's definitely a point in their favor.
Good sign.
Their history of EPS growth, that's solid.
And they're always innovating.
Trying to stay ahead of the curve.
But remember those projected growth rates?
Yeah, they are a bit lower.
Then their historical performance.
So it's not a sure thing?
No guarantees in the market.
Exactly. Gotta manage those expectations.
So maybe not a pure growth play.
But still potential there.
What if our listener's more interested in income?
Steady, reliable income.
Those dividends.
Yeah, PepsiCo's got a long history of payouts.
Makes them worth considering.
But to make a truly informed decision, you'd need to compare that dividend yield
See how it stacks up.
against other dividend-paying stocks out there.
Right, and don't forget those share buybacks either.
Another way they can return value.
Maybe not a direct payout like a dividend.
But if they're actively repurchasing shares,
It can contribute to that long-term shareholder value.
potential to boost that stock price.
Now, what about the ESG conscious investor?
That's a whole other dimension.
Because PepsiCo faces some ESG challenges.
And given their industry, their global reach,
How should an investor who prioritizes those factors?
how should they approach this one?
It's got to be a deeper level of scrutiny, right?
Definitely. Got to go beyond the surface.
So beyond those ESG ratings,
Look into their sustainability reports.
analyze their policies, track their progress.
See what they're actually doing on the ground.
So it's about aligning your investments with your values.
ESG investing is about more than just checking boxes.
It's about putting your money where your heart is.
Exactly. Making a difference with your investments.
All right, I think we've given our listener a lot to digest here.
It's plenty to chew on.
But ultimately, the decision of whether to buy, hold, or sell PP,
That's up to you.
it's your portfolio, your choice.
And as we wrap up,
One final thought.
I want to emphasize this.
Our sources, they've given us great insights.
But the market, it's constantly evolving.
Things change so fast.
So stay informed, do your research.
And never stop learning.
That's what makes investing so exciting.
A little bit addictive, even.
If you enjoyed this deep dive into PepsiCo, hit that subscribe button.
And let us know what other stocks or topics you'd like us to cover.
We love hearing from you.
Until next time, happy investing, everyone.